This is Bloomberg Crypto, a daily Bloomberg iHeart podcast, and I'm Stacey Marie Ishmael, managing editor of crypto for Bloomberg News. It's Monday, November 28th. Ask any regulator, and they'll tell you the same thing. They have a tough job. As soon as they seem to have a grasp on whatever the last crisis was that blew everything up, something new comes along and blows up in the patch that they were responsible for. But that doesn't mean they all take the same approach to managing and preventing crises, though. Consider crypto. So many different vintages of debacle, so many different countries involved. In late 2022, Hong Kong updated its crypto regulations in a way that signaled a goal of increasing retail access to the asset class. Just days later, FTX filed for bankruptcy. In nearby Singapore, which has been tightening regulations after big losses this year for retail investors, the attitude seems to still be a little bit stricter. Korea, which is still dealing with the aftermath of the collapse of the Terra Luna tokens, is currently focusing on enforcement. And India, somewhat uniquely in the region, is using tax policy to attempt to drive behavior. Here with me to talk about how different Asian countries are approaching crypto regulation in the shadow of the FTX collapse is Bloomberg senior editor for crypto, Sunil Jagtiani.
It's going to be less about what's the taxonomy of tokens and how do they operate and how do we figure that out. And it's going to be more about the traditional things. Here's a crypto outfit. Okay, what do we know about it? Where are the assets? Are they safe?
Sunil, welcome back to the podcast.
Thank you, Stacey Marie.
You are a senior editor for crypto based in Sydney and have lived and worked in Asia for a decently long time at this point and have this sort of unique vantage point of being able to see in real time, as it were, how different jurisdictions are trying to figure out what the hell they should do about this crypto asset class. Can you talk a little bit about the differences of opinion, shall we say, that are emerging between two of the biggest players in the region on this subject?
Sure, yeah. Currently, I'm in Singapore. And Singapore, a few years ago, was an early, if you like, adopter of the idea that there's something to be said for trying to develop a crypto hub. So they were at the forefront of trying to create an environment that attracts investment and would yield a collection of companies and an investment landscape that gives them a chance to be a hub for Asia. So they began to pursue that. And then, of course, we've seen over the past year the rout in cryptocurrencies and the way in which investors like the Three Arrows hedge fund have blown up.
Crypto hedge fund Three Arrows Capital has been ordered into liquidation by a court in the British Virgin Islands.
We saw the collapse of the Terra USD and the Luna ecosystem.
Terra USD and its sister token Luna lost their peg to the dollar in the last few weeks. They had a spectacular meltdown, sending prices to near zero and their market value
buffeted Singapore because Three Arrows Capital, the Terra USD Luna ecosystem, they both had links into Singapore. So that huge wipeout and the large numbers of investors who were affected by it led Singapore to become much more cautious about retail speculation and the retail part of the crypto industry. So they've pivoted towards becoming much harsher in their approach to retail investment. They split between high net worth investors who are given more liberty and the remainder. And they're doing this, they say, because they want to ensure that people are appropriately protected from the risks that we've seen through crypto this year. So Singapore, if you like, still wants to become a hub, but a hub that is focused on the productive uses of blockchain technology, which, to be fair, haven't really emerged to the scale that we might have expected so far. It's still a work in progress. And they don't want the speculative avatars that come along with crypto and cause all kinds of problems. So that's where Singapore is right now. Hong Kong, interestingly, is if you like, going the other way. That's overly simplistic in some ways, but it's pivoting towards an environment where they want to allow retail trading, and it's pivoting towards an environment where they want to allow things like exchange-traded funds that retail investors have access to. They're even looking at the legal status of smart chain contracts, and they're even looking at tokenized assets and how a regulatory framework would work for tokenized assets. So, and all of this came through at the end of October. So all of a sudden, Hong Kong has moved from a voluntary licensing regime that some people viewed as signaling a not very welcoming environment. They've moved from that all of a sudden to trying to promote themselves as the preeminent hub for Asia. So you have these two jurisdictions going on very different tracks right now, and the question is what kind of a reordering that's going to yield in Asia, and we don't have the answer yet because it's all happening right now. And in the midst of that, FTX blew up to add to the complications.
Here's the thing: before FTX was domiciled in the Bahamas, it was domiciled in Hong Kong.
Correct.
And they left because, in the aftermath of various countries in Asia, notably China, taking this much harsher stance on all things crypto, various other jurisdictions, i.e. places like the US, the Bahamas, Bermuda, popped up and were like, hey, we have great weather over here. Miami,
and
fantastic. And they do.
Yep.
Nassau beaches, outstanding. And, sort of rolled out the red carpet, although the carpets don't work well on sand, but you get the analogy, rolled out the red carpet for these folks. And, SBF, FTX, etc., up sticks, moved to the Bahamas. What does that say about what the regime was in Hong Kong before, right? And it's kind of the same question for Singapore, because Three Arrows Capital was also domiciled in Singapore. So you have these two places that had historically different paths now being beset by very similar types of blow-ups.
Yes. So Sam Bankman-Fried set up in Hong Kong, but then Hong Kong began to introduce a voluntary licensing regime, and that's what they have in place right now. And it's somewhat restrictive if you opt to become licensed, because you cannot offer your services to retail investors unless they have more than $1 million of assets to invest. So it's restricting you to high net worth investors who you would assume have a better understanding of the risks they're taking. So that, together with the fact that China has imposed basically a year-long ban on pretty much all things crypto, those two things together gave you the signal. If you were a crypto player, you would look at that and think, well, those two things together suggest that Hong Kong isn't the place to be. There was also, at the same time, some pretty harsh COVID restrictions that lingered in Hong Kong longer than in other places. And you also had a degree of political unrest in Hong Kong. So all of those things conspired to, not just in crypto, but they conspired to create a brain drain. People wanted to leave Hong Kong. Its status as a financial center came into question. And it's all of those things that Hong Kong is now trying to reverse. So yes, FTX set up there and left, but in a way, they're trying to create a regime that could encourage, not FTX because it's now bust, but other companies of that sort to come back in and invest and set up in Hong Kong. And, we can talk about this if you like, but it looks like even after FTX, that the upper levels of government are still going to stick with this plan.
Korea, for, several years now, has been a place where there's a significant retail crypto presence, interest, activity, volumes. It's been the place that, various types of DeFi protocols sprung up. There is a pretty active developer community among, Korean developers who are interested in crypto. What is the regime there as it relates to regulation?
The president who took power in May, he came in on a platform that was pro-crypto. And that was in the wake of the huge boom in crypto. And in Korea, before the recent blow up and the recent rout in cryptocurrencies, in Korea, you saw a whole bunch of people create huge amounts of wealth and become billionaires. And they were well known and famous in Korea. And so when Yoon came in, his idea was to bring in a comprehensive framework to regulate the industry, and he was adopting a pro-crypto stance. But then, of course, he came into power, and that was in May, and pretty much straight afterwards, Terra blew up. So So the crypto the regime change in Korea is stalled, and we have to work through the fallout of the Do Kwon situation. Do Kwon was the progenitor of the Terra Luna ecosystem. He is apparently the subject of an Interpol Red Notice. We're not sure where he is, and there's an arrest warrant for him that's been issued by the Koreans. So we have to resolve all that, and as they're pursuing Do Kwon, they're also trying to figure out what kind of crypto regime they want. So it's incredibly difficult and complicated, and lawmakers are arguing out exactly how that framework should look like, and it doesn't look like it's going to be in place anytime soon. So Korea is, to say the least, very vexed by crypto and what to do now.
Vexed is truly one of my favorite words. I want to also ask you, we've had our colleague Sid Shukla on the podcast talking about the Indian approach to crypto regulation, which is not exactly to regulate it, but use taxes and taxation as a way to either incentivize or disincentivize certain types of behavior. They've also taken steps to make it more difficult for entities like Coinbase to use, Indian banks or have access to Indian banks. And what that means in practice is if you are a person in India trying to fund a Coinbase wallet, the number of hoops you would have to jump through is sufficiently exhausting that you kind of give up halfway through, even if there's nothing technically saying you're not allowed to do that. Do you think if we were having this conversation sort of 6 months from now, that we live in a world in which some version of all of these approaches, there's like a middle ground, right? There's like a little sprinkling of tax policy. There's a little sprinkling of different types of registration regimes. There's some consumer protection. Or are we staring into everybody's going to do completely their own thing? And, which is a nightmare for the companies involved, right? How you get regulated in India versus how you get regulated in Korea versus Singapore versus Hong Kong versus China. What are you going to
do? If we look at India first, I would hesitate to extrapolate very much from India to the rest of the world. One, because India historically has struggled with a very low tax take. They have lots of rules and lots of taxes, and, tax evasion is a national sport. So you have to look at the imposition of the levy on crypto transactions in India, both from the perspective of trying to control the industry, which they are skeptical of, but also because India struggles to raise money. And India has this kind of reflexive concern about, nefarious uses of technology, and they're always worried about what they call black money, which is money under the table that could be used for all kinds of things, including, for example, terrorist activity. So India is a unique situation country, and I'm not sure you can extrapolate too much from what they're doing to the rest of the world. However, we have seen the International Monetary Fund, we've seen European officials who are, if you like, a bit further ahead in regulations of crypto. Both those bodies have talked about how do you have a globally coordinated approach to regulating crypto? But that's no different to other topics. How do you have a globally coordinated approach to taxation? How do you have a globally coordinated approach to corporate taxation, for example? These things are very hard, and they're hard in crypto as well. So I think if I had to bet, I would say it's almost impossible to have the kind of coordination you were talking about across jurisdictions. And instead, you're going to have companies playing arbitrage, trying to figure out where the best place is for them to set up and how many people they can serve from that location. And that's why we're seeing places like Hong Kong do what they're doing with their policy shift.
Which, to your point, is exactly what we saw with taxation for a while, right? Like, why'd everybody have an Ireland HQ if not to take advantage of those extremely preferential tax treatments that weren't available to them in other places? We'll be right back with Bloomberg senior editor for crypto, Sunil Jagtiani, with more on crypto regulations in Asia. We focused a lot on the institutional side of the house, whether from the regulatory perspective or the companies themselves. But I'm going to say 3 letters, and I just want your reaction to it, which is VPN.
Yes, I understand what you're saying. What you're saying is that technology can make a laughing stock of any kind of regulatory approach, right? And to an extent, I agree. But I feel like what we're seeing now with the FTX collapse is going to really concentrate the minds of regulators. I think they're going to look really, really closely at things like disclosure, making sure that exchanges really are very clear that client assets are safe, disclosing very clearly where leverage is, disclosing very clearly how they manage risk. I think all of these things are going to shoot up and be front of house for regulators. It's going to be less about what's the taxonomy of tokens and how do they operate and how do we figure that out. And it's going to be more about the traditional things. Here's a crypto outfit. Okay, what do we know about it? Where are the assets? Are they safe? How much leverage have they really got? Have they got the right kind of risk management practices? I think it's going to be a lot of that we see coming through over the next few years, but it's not going to happen quickly. So there's lots of time for more things to blow up while they try and put that into place.
The perpetual struggle of regulators, it's like you're always fighting, not the last war, but like the one before that.
Yeah, exactly. I don't envy them. It's a very hard task. It's hard enough for regular finance. Can you imagine how hard it must be for crypto? Somebody was talking the other day about not stable coins, but what they call flat coins, things that would go up in value along with inflation while retaining their, essential value beyond that. So you can see from the point of view of a regulator, okay, we're trying to get our head around stable coins, and now people are talking about flat coins that somehow would go up with inflation. How's that going to work? So it's like a Gordian knot, right? It's almost impossible to untangle. But that's what they paid the small or big bucks to do.
Mostly small.
Sunil,
thank you. Big headaches. Yeah, small bucks, big headaches. Well, thank you very much for that tour of crypto regulation in Asia Pac. Where can folks find you if they want to see more of your coverage or at least know what you're up to?
You can probably find my byline here or there on the Bloomberg terminal or on the Bloomberg website as well. And if you have any complaints, please send them to Stacey Marie. Thank you very much.
Fair enough. Fair enough. Thank you so much, Sunil. Take care. This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producers are Mohammed Farouk and Sharon Barrero. Our associate producers are Ty Butler and Moses Undum. Desta Wonderad is our engineer. Original music by Leo Sidran. I'm Stacey Marie Ishmael. We'll be back tomorrow.